Welcome back to the channel, everyone. Manny B Investing in BI. We're going to take a look at a July 26th blog post from Paribus. Follow the leader. Let's take a look at the tweet. Crypto and stock connection. It's important to know the correlation does not imply causation. This article covers the relation between these two markets and what to be aware of when listening to advice. Interesting. Let's see what they're going to be talking about in this. Maybe folks like me. For many investors in crypto, this is their first foray into investing in markets and starting to understand monetary policy. While most people are drawn in by the prospects of increased returns or JPEGs of monkeys, the last thing they ever expected was to understand market theory. Boy, are they taking a shot at me, right? Not entirely. I've previous investment experience when I was a younger adult. Didn't go very well, but you live and you learn. The crypto market, like every other free market, is based on liquidity, supply, and demand. When there's low liquidity, the price is highly volatile because small movements and trades can have large effects. For instance, if you dump 100 million of BTC on the crypto market, the price will plummet much more than if you dumped the same value of US dollars on a foreign exchange market. Although this aspect of the markets is fairly easy to understand, many people struggle with the concept of market correlations. Why, for instance, the crypto market is affected by the stock market and what the S&P 500 have to do with cryptocurrencies. Often, correlation and causation can be confused. Just because two things react at the same time doesn't necessarily mean that one is causing an effect on the other. There have been many dramatic examples of this phenomenon, such as the correlation between the number of films Nicolas Cage appeared in, correlated at one time to the number of drownings in swimming pools. Another correlation showed that between 2000 and 2008, as cheese consumption per capita increased, so did the number of people who died after becoming entangled in their bed sheets. Oh man, rogue data, I love it. Similar correlations occur between the stock market and the crypto markets, and although these may share similar causes, they have been shown to be a direct cause of another. They haven't been shown. As the S&P 500 drops, crypto markets usually also drop. And as it picks up, so does the crypto market. This is why so many traders look at their cryptocurrency investments and trades in the context of a wider markets. To help comprehend this relationship, it's useful to understand a little about the S&P 500. Ooh, lessons. The S&P 500 was created by Standard & Poor's, a US-based financial intelligence company. It's an index of the market that tracks 500 leading companies that are listed on the stock exchange in the US. The idea behind the S&P 500 is that by aggregating the ups and downs of those 500 companies, it gives an insight into how the market in general are doing. In September 2021, the 9 largest companies within the S&P 500 accounted for over 25% of the combined value of all 500. Wow, that's a monster chunk. Of particular interest to the cryptocurrency market is the fact that these 9 companies are all involved in tech or finance. They are Apple, Microsoft, Alphabet or Google, Amazon, Meta or Facebook, Tesla, Nvidia, Berkshire Hathaway, and JP Morgan Chase. There is a significant overlap between people who invest in tech and financial stocks and people who invest in crypto. This is especially so when you look at the institutional investors that drove a significant increase in liquidity of the crypto bull run in 2021. In addition, last year, JP Morgan Chase opened crypto trading to all its wealth management clients. Tesla added BTC to its balance sheet. Facebook rebranded to Meta as it pushed harder with its metaverse development. And Berkshire Hathaway has just acquired Nubank, a digital bank that specializes in cryptocurrencies. In addition to the businesses themselves, if their investor sense a difficult road ahead, they are likely to try and sell their stock. When this happens in a large enough volume, the stock prices fall. If they're also holding crypto, they will more than likely seek to sell this too. However, the liquidity in crypto is lower than the S&P 500, so it's likely to have a greater effect. The combination of these factors gives rise to the appearance that when the S&P 500 goes down, so too crypto markets go down. Due to the difference in liquidity of the respective markets, it will also appear that crypto goes down harder and faster than the S&P 500. To outside observers, it's easy to think that the S&P 500 is causing the crypto market to go up or down, but this coupling of the market may well be due to the fact that they share similar high-value investors, so the same people moving money in both markets. A key point for retail investors to bear in mind is that the high net worth investors can have a huge impact on crypto markets. I learned this in the last run. For those who have forgotten the 2008 financial crash that caused the collapse of the Lehman Brothers Bank, it's also worth remembering the role of the Federal Assurance in U.S. banks. The Federal Deposit Insurance Corporation, of the FDIC, guarantees to protect up to $250,000 of each person's funds that are deposited in an FDIC-insured bank should the bank fail. Whilst this sounds like a significant amount for most retail investors, when you have $100+ million to find a safe harbor for, it's not reassuring. Those fortunate individuals use wealth management services that invest in the markets for them, spreading the risk. As soon as the risk changes, their investment portfolio changes too. This is why you'll see an increase in stock price and crypto price when the macroeconomic picture looks positive, and a drop in both when it looks uncertain. The advantage of tracking the S&P 500 is that far more stable than the crypto markets, and the analysis that study it are far more qualified than most crypto influencers. I give them that. In general, factors that affect the S&P 500 also affect the crypto markets, which is why you'll often hear it referenced alongside analysis of cryptocurrencies. If someone is claiming that the crypto bottom is in and a bull run is around the corner, it's worthwhile checking what analysis specializing in the S&P 500 say. Although they're not directly linked, you can stay one step ahead by following the S&P 500 rather than a YouTuber with no formal training in technical analysis. That's one of the big reasons why I don't do technical analysis, because I'm not trained in it and I'm not a professional. And I honestly just think it's a bunch of squiggly foolishness lines that people use to buy or sell something when no one knows what they're talking about. I do find it fascinating to follow Dan. I like his content. But again, I don't like use it as an investment tool. I just use it to learn, partly entertain myself, and get a better understanding for different things. But I don't feel assaulted in this post. It's a good one. If you think it's good, drop a comment in the comment section, hit that like, share the video, and then I'll see you on the next one. Peace.